Welcome back, students who are taking financial accounting, and in this series of videos we are working on the assigned homework problems from the digital study guide for Chapter 11, the Group B exercises. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. Okay, so 29. Calculate certain information for the direct method. Compute the following items for the statement of cash flows. Right, the beginning and ending accounts receivable balances are 26 and 31 respectively. Credit sales for the period are 147. How much are cash collections? And so we're best served by using a T account, and that's our accounts receivable. And it says we begin with 26,000 and we end with 31,000. And so our credit sales for the period were 147. So we increased our accounts receivable by 147, and we want to know what our cash collection was. Well, when we want to know what the cash collection is, and that is the payment in cash for the accounts receivable that's owed, right? So that would be our credit to the accounts receivable. So simple, 26,000 plus 147,000, right? Minus X, which is this dollar amount, and that would equal 31,000. Okay, again, doing the math, we would move the 31 over, so that would become a negative 31, and we'd move the unknown amount across the equal sign, and so that would make that the question mark there. So we have 26,000 plus 147,000 minus 31,000, 26 plus 147 less 31,000, and that will equal 142,000. Okay, so that's the amount of the cash payment for our accounts receivable. Okay. So pause the video because I'm going to erase that. Okay. Okay, so let me just take a quick look back. Okay. I'm just looking at previous homework problems. These are very similar to, exercise 11-26B. All right. So 11-26B, that one had dealt with retained earnings and fixed assets, but it's basically the same type of problem. So if you need additional insight, go ahead and watch that particular video if you have to. Right. And so then it says cost of goods sold is 94,000. Beginning inventory balances are 31 and ending is 34. Beginning and ending accounts payable are 4,000 and 9,000 respectively. How much are cash payments for inventory? Right. So we're going to have to set up an inventory account, and we're also going to set up a T account for our accounts payable. And so my beginning inventory was 31,000, and my ending inventory was 34,000. And my cost of goods sold was 94,000. Oops, 94,000. Okay, remember that when we sell, when we put an item into inventory, we debit it because we're increasing the inventory, but whenever we make the sale, we not only have to make the journal entry to record the sale, but we also have to make a journal entry to take the item out of inventory and put it in the cost of goods sold. So even though it's saying our cost of goods sold is 94,000, the entry for that is a debit to cost of goods sold for 94,000 and a credit to inventory for 94,000. So that's why you're seeing a credit to the inventory account there. All right. Okay, so we have for our accounts payable, the beginning balance of our accounts payable is 4,000, and the ending balance is 9,000. Oops. Okay. And let's see here. Okay, so what we need to do is we need to figure out how much our purchases are. Right? So we have the 31,000 minus the 94,000 plus the purchases to give us an ending balance of 34,000. Okay, so move the 34,000 across the equal sign, that's negative 34,000. Of course, when we move the unknown across the equal sign, that stays, as the unknown. And so we have 31,000 minus 94,000 minus 34,000. So we have 31 minus 94 minus 34, which gives us a minus 97,000. So our purchases are 97,000. Okay, because we're buying the inventory, we're increasing our inventory by 97,000. Right? So if that's our purchases and we're buying those purchases on account, that 97,000 also goes over here in our accounts payable. Right? So we want to know how much our cash payments were for the inventory. So we want to know how much our credit is, our payments to, our debit is for the payments of the accounts payable to our vendors. So we're going to go through, the same type of spiel here where I have 4,000 plus the 97,000 minus a certain amount, which is equal to our 9,000. We move the 9,000 over. We move the unknown across the equal sign. So I have 4,000 plus 97,000 minus 9,000 is equal to what? So 4 plus 97 minus 9, and that gives me a balance of a payment of 92,000 to our vendors. Okay, so that's the answer to the question. All right, how much are the cash payments for inventory? All right. All right, so quickly to recap this particular question, right? We know our inventory, all right? We're given the information. We have to figure out how much our purchases were in our inventory account. Those purchases are being paid as an accounts payable, and we want to know what our cash payments are for the inventory. Well, when we look at our accounts payable, and we're buying stuff on credit, but when we pay it, all right, that is a debit to the accounts payable, and that's what we're looking for, is that 92,000. So that's telling us we spent 92,000 for the inventory items. All right. Now you can say, well, maybe out of this 97,000 in purchases for inventory, maybe some of that was already in cash. It's the part of the setup of the problem that you're dealing strictly with, items on credit. And most businesses, do that. They're going to buy their stuff on account. Decent sized businesses running their businesses correctly try to use cash as little as possible because they document everything, by receiving checks and paying, and writing checks. That's how they, can document things, and they do things on account. They, have credit set up for their customers, and they have credit set up with their vendors, which facilitates using business. And I had discussed that in the theory videos. So with that said, I'm not going to belabor that point because that's starting to get far afield here. But in order to arrive at the cash payment for the inventory, we have to figure out, how much our purchases were in our inventory, and then apply that to our accounts payable account in order to see how much we actually paid in cash as it affected the balances of our accounts payable. All right. So with that said, I will see you, if you didn't understand it, go ahead and rewind the video and watch it again. And if you still have any questions, feel free to contact an instructor, and I'll see you in the next video for the last exercise for this section.